What's up everybody, I am Jaspreet Singh, and if you want to become wealthy today in this economic environment, then you have to understand where the opportunities are today, in today's economy. And unfortunately, or fortunately, I guess depending which way you look at it, it isn't always so clear to understand where the opportunities are, because on one hand, we have the Federal Reserve Bank who says that our economy is very strong right now, and the inflation will get under control essentially with no issues. Let me show you a clip from just a few days ago where our Secretary of Commerce is talking about how strong and robust our economy is. Take a look.
It seems like people are trying to talk themselves into a recession, but there's no evidence to suggest we should be worried about it. Consumer spending is as high as it's ever been, no slowdown. People's bank accounts in good shape, labor market's really strong, businesses projecting strong growth. So I think that the economy is strong.
This is where it becomes very important for you to pay attention to what's happening, understand what's happening, and then apply the data to yourself instead of just blindly listening to somebody else, instead of blindly listening to the government, the Fed, or even just a random guy on YouTube. Like on one hand, you can say that bank accounts are very strong for Americans, even though the savings levels are the lowest that we've seen since 2008. Now, there could be a couple reasons for this. Maybe people aren't saving their money because they're investing all their money in assets trying to become wealthy, or maybe the flip side is people can't save any more money because they don't have the ability to do that because inflation is so high, making the cost of living so expensive. Or on the flip side, you can say that the economy is strong because consumer spending is high and people are still spending money like normal, so they're not worried about a recession. Or perhaps maybe the reason why people are forced to spend so much money right now is because of inflation, because they have to spend so much money on gas and now they're turning to their credit cards to be able to afford their higher cost of living. My goal by making these videos is not to tell you what to think or to just get you to like me. I mean, if that's what I wanted, I'd just be selling guacamole all day. But my goal here is to help you make smarter decisions with your money, because sometimes people will be wrong. Because even if you just look back to the 2008 crash, in February of 2008, the chairman of the Fed, Ben Bernanke, came out and said that there's no recession on the horizon. He kept talking about how there's no real issues in the housing market, everything is contained. And then we saw what happened after that, which is why I want you to make better decisions and take better care of your money by understanding what's going on. That way you can look at the data and analyze things for yourself. Right now, many of the big retailers are struggling. Amazon, Target, Walmart, and Costco have come out and talked about how higher inflation is hurting their margins. They're not able to keep up with the higher cost of their products because people don't have the ability to keep paying these higher prices. Now, that doesn't mean that people aren't spending money. I mean, people are still spending money there. They're just paying more money to buy their basic necessities. But that also doesn't mean that all retailers are hurting, because you have some retailers, some big retailers that are making a killing right now. Stores like Dollar General and the Dollar Tree. These companies have been seeing a massive boom in their stores because inflation has been benefiting them. It's not benefiting them because their margins are getting better. It's benefiting them because people are going to the bigger stores saying, wow, that's a lot of money for guac. So now they're going to the dollar store and they're going to the Dollar General and they go to the Dollar Tree and they're saying, well, even though you don't have guac, it's okay. At least I can buy things for a lot cheaper here than somewhere else. People are still spending money. They're just changing how and where they're spending money because everything is so expensive. If you just look at the numbers and the data, it doesn't show you that. Let's take a look at energy costs. If you remember back in April when oil prices and gas prices really started to skyrocket, that's when President Biden came out and the presidential administration talked about how they were going to release 1 million barrels of oil a day to help relieve gas prices, to help relieve energy costs, and it worked. In April, we saw gas prices go down, and it also helped relieve some of the inflation that we saw in April because, well, gas prices did temporarily go down a little bit. Lower gas prices means that it costs you less money to fill up your tank of gas. It means that it costs less money to buy a ticket if you want to go on a vacation. It means that your grocery prices go down because transportation costs go down. So lower oil and gas prices help kind of trickle down to the cost of everything in our economy. And then came the month of May, and that's when we saw gas prices start breaking even more records, and that's when JP Morgan Chase Bank came out and they said that we can expect the average median gas price across the country to hit $6 a gallon by the middle of 2022. Now, this isn't every single state because some states like California already have significantly more expensive gas, but he's saying that the average gas price around the country will be $6 a gallon. So if you're already paying $6 a gallon, maybe you'll be paying even more if nothing changes. That's what Chase Bank said, that if nothing changes, gas prices are going to continue to go up. And if we continue to see higher gas prices, what does that mean? It's going to trickle down to other parts of the economy as well. Not only is it going to cost you more money to drive your car, but that means that getting tickets to fly somewhere would be more expensive. That also means that buying your groceries would be more expensive. Now, of course, things can change. Something might change in the oil market. Maybe something will happen between Russia and Ukraine and now we can finally get more oil from that side of the world. Maybe something will happen where we can unleash more pipelines in the United States. I don't know. But if things don't change, we could see the price of gas go up even more, and that could affect the economy, and that could affect inflation even more. This is where everybody starts to ask that question of what do I do? What should I be doing with my money? Now, the basic premise kind of stays the same no matter what you believe. At the end of the day, when inflation is an issue, that's when you want to be taking your cash and converting it to assets, because when you have inflation, that tends to benefit asset prices. Now, that doesn't mean that asset prices only go up, because asset prices can be affected by a lot of things, but over the long term, more inflation benefits asset prices and it hurts disproportionately the dollar and currency. So that's where saving money has the least benefit. Now, saving money can be beneficial for the right reasons. You just want to make sure you're saving your money the right way, because if you're saving your money for an emergency or you're saving your money to invest, that's okay, because now you have a purpose for saving your money. But if you're just saving your money because you think it's going to make you wealthy one day, well, I have news for you. Inflation is going to be eating away the value of your savings, and you're essentially guaranteed to become broker each and every day, because inflation is eating away the value of your savings. So where can you put your money? Well, the assets that I think most people are familiar with would be stocks, real estate, and even cryptocurrency. I want to talk about crypto first because of all the issues going on with crypto. We saw what happened with the Terra Luna crash, with all the issues there, that coin essentially going bankrupt, people losing millions and millions of dollars essentially overnight. So let's talk about crypto first, because yes, there's a lot of crap in crypto. I've been talking about this for a while, where anytime you have this sort of free money and just cheap dollars enter the system, you're also going to have some dumb dollars enter the system, and that can create bad coins, bad investments. Now, if you believe in the future of cryptocurrency and the future of blockchain, again, I'm not telling you what to believe or what not to believe. That's for you to decide if you believe in that or not. Then cryptocurrency can be a good investment, but you have to understand that it's going to be much more volatile than most of your traditional investments, because one is already a speculative investment. Nobody knows where cryptocurrency is going to be in the next 10 years. I mean, the stock market has been around for over a century. Real estate has been around forever, but cryptocurrency is something completely new. So that's what you have to understand, that it's going to be much more speculative, much more volatile. Now, as some of this free money goes away, as the tide starts to go out, that could cause more coins to go bust. That could cause more volatility in the cryptocurrency market. And if you're not willing to withstand that, then crypto is not a good investment for you. If you're not willing to go through whatever might come with craziness, if you can't risk seeing your money lose a lot of its value in crypto, then do not invest your money in it. You do not want to be investing more than you're willing to lose in really anything, but especially in crypto. And so now, if you are interested in crypto, if you do like the idea of investing in the blockchain, if you like the idea of investing in potentially the future of the internet, that's where I invest some of my money. I understand it's a speculative part of my portfolio. It's not a massive part of my portfolio, but it is there. This is where you got to do your research and know what you're investing in. Right? I keep my investments pretty basic. I invest in Bitcoin, Ethereum, and a couple of the smaller coins, and that's it. And the way that I invest my money is to buy a little bit every single day. It's pretty simple. I don't really have a secret strategy. If I saw a massive Bitcoin crash, sure, I might come in and buy a little bit more. But other than that, I have a dollar cost average system set up where I'm buying a little bit of the cryptocurrencies that I want every single day. It's on autopilot, it's passive, and I don't really touch it. So now I don't have to worry about what's going on in the swings, and I'm not investing for the next 6 months or the next 2 years. I'm investing for the long term. Maybe it'll go nowhere. Maybe it'll go somewhere. And so I understand it's a speculative part of my portfolio, something that I believe in, but you got to decide if this is something right for you or not. And you can expect there will be more coins that will go bust in cryptocurrency. But you have to be willing to accept that, and you have to be willing to do your research. Now, if you are interested in investing in cryptocurrency and you're looking for a good brokerage to use, then you can check out our sponsor, FTX US. FTX is really cool because they make it super simple for not only you to buy and sell cryptocurrency, but for you to dollar cost average cryptocurrency. So if you wanted to buy Bitcoin and you wanted to buy it one time, you can do that. But you can also select the frequency as soon as you click the buy button. You can buy it once, you can buy it once a month, you can buy it once every 2 weeks, you can buy it once a week, you can buy it every day. You get to pick the frequency. So if you want to set up a dollar cost average system, it's completely up to you, and it's very easy to do that. The reason why I like FTX is because the fees are so much lower on FTX than pretty much every other major brokerage out there. So if you are interested in investing in cryptocurrency, this gives you the option to have more of your money be invested into cryptocurrency instead of just making your brokerage richer. And the cool part is that FTX is super innovative. Not only can you trade cryptos and NFTs, but now they're also adding in stocks. So that way you can do pretty much everything anything on their platform. You can trade crypto, NFTs, and stocks. And the best part of all is that because you are a Minority Mindset fan, if you use my link down in the description below, and then you enter in the referral code MINORITY, you will get up to $100 worth of crypto. And then when you trade $10, they will also give you a free coin. So if you want to do that, you got to use my link down in the description, and then you got to enter in the referral code MINORITY. Second, if we're talking about the stock market, you have to be very honest with yourself here, because a lot of people get excited by the idea of trying to find the next hot stock. How do you find the next Amazon? How do you find the next Google? And that can be fun and it can be exciting, but it takes a lot of work. And if you're not willing to put in that work, then maybe you don't go out and try to invest in individual companies, because that requires an additional level of knowledge and an additional level of mental kind of knowledge and ability to control your emotions. Because when you go through volatile times in the economy and the markets and you see your investment go down, you might think that your company is about to go bust, so you want to sell out at a loss. But maybe that could have been a good buying opportunity for you. And if you're not willing to read the earnings statements, you're not willing to keep up with the company, that's where your emotions can help take over the rational, strategic part of your brain. So if you're not interested in doing all of that, then maybe you can consider investing your money into an ETF. Like if you invest your money into an S&P 500 ETF, what that means is you're investing your money into an ETF, which is a basket, a group of stocks. So you're not investing in one company, you're investing in a group of companies, and the S&P 500 is a group of the biggest 500 companies in the stock market. So now, all you gotta do is invest in one thing, one ETF. A couple examples of this are VOO and SPY. Again, not telling you what to invest in, and I do have my own money in VOO as a disclaimer. But you can invest your money into those ETFs, and now you're getting exposure to the biggest 500 companies in the stock market. Now, what you're doing is you're essentially investing your money into the future of America. If you think America, the economy is going to continue to grow, well then this ETF will probably grow because investing in the biggest 500 companies on the stock market. So it's an easier way for you to get exposure to more companies without doing all the research, but this is where you have to be honest with yourself. If you like the idea of doing all the research, then you can invest in individual companies. It comes with more risk, but also more potential reward. And then the last thing when it comes to stocks is you also have to understand how to buy. Because some people try to time the bottom. They want to find the best buying opportunity. I want to buy it at the right dollar, at the right penny. That way I can find the best perfect price possible. But Warren Buffett says it best. Time in the market beats timing the market. Nobody can perfectly time the market. Nobody can perfectly time the bottom. And when you're trying to time the bottom, what ends up happening for a lot of people is either you miss the bottom, or you buy too early and then you see it go lower and then you sell and then you lose a lot of money, because nobody can predict the bottom. And then you always think that, oh, I just wanted to go a little bit lower. I'll buy it when it's a little bit lower. I'll buy it when it's a little bit lower. And then it starts going up, and then you miss that opportunity, and now you say, oh, it's too expensive now. And it keeps going higher and higher and higher, and now you miss all the gains. So that's where you can do something like a dollar cost average system, the same thing that I talked about with cryptocurrency. That's what I do in the stock market. I have a few ETFs that I want to own, and every week I'm just buying a little bit more of these ETFs. It's completely passive, it's completely automatic. I don't even touch it, I don't even look at it. Whatever's happening in the market, doesn't matter. I keep buying a little bit more of these ETFs. And then if you have some companies that you want to own, well, then you make a list, you monitor them, and now all you're looking for is a good price point. If the stock market starts to go down or those companies start to go down, well, then you can come in and buy, but you just have to remember to stick with your strategy and not let the emotions take over the rational and strategic part of your brain. Third, let's talk about real estate, because real estate can be a great investment. I mean, I started investing in real estate after the 2008 crash. I mean, it was a great buying point for real estate if you're an investor, but right now we are in a seller's market, where sellers still have the upper hand. Real estate prices are still growing like crazy, even though mortgage rates are going up. And this is where you have a lot of opinions. Oh, we're going to see a crash in the real estate market. Or, oh, home prices are going to continue going up because you have big corporations buying homes. So buy a home as fast as you can right now. The thing that I want you to pay attention to with real estate is the direction where the housing market is going to go is going to depend on the Fed. Because if the Fed stays true to fighting inflation and they keep rising, jacking up interest rates, well, that's going to make housing more expensive. If housing becomes more expensive, generally you can expect that to bring the housing market down. Now, if the Fed does the opposite and they say, okay, our economy is slowing down, we need to go fight the slowing economy, and then they start cutting interest rates, that makes borrowing money cheaper. That makes getting a mortgage cheaper. Now people are going to say, yeah, maybe I couldn't have afforded that $500,000 home 6 months ago, but now because mortgage rates are going back down, maybe I can afford it. Now that brings up demand, and that generally can push home prices higher. Now, we don't know what the Fed is actually going to do. They say that they want to keep fighting inflation, which means they want to keep jacking up interest rates. But again, nobody knows for sure. If something changes in the economy, if the Fed changes their course and they do this, well, that can affect the real estate market. So if you're going to be investing in real estate, the key that you want to be looking for is what are your investment metrics. When I invest in real estate, I'm not doing as much now because I'm investing a lot more of my money into Market Briefs, which is my financial newsletter company. If you haven't seen that yet, it's a free financial newsletter. You can check it out at marketbriefs.com. But when I invest in real estate, what I look for is not home prices, not appreciation. I'm looking for one thing. I'm looking for cash flow. I look for a 7% cash on cash return on my money. So for every dollar that I invest, I want to get 7 cents back in cash flow. And that's it. I mean, if appreciation happens, if the home price goes up, that's great. It's icing on the cake. If home prices go down, it doesn't really matter because this is what I'm looking for. This is what I'm investing for. And that's it. So I make my investing decisions in real estate based off of this. Now, this is going to depend also where you are investing in real estate, because in some states like Arizona and Texas and Nevada, even California and Florida as well, especially, these states, a lot of people don't invest for cash flow. You have a lot of investors that are looking for appreciation. They're buying a property for, say, $300,000, hoping that your tenant will be able to pay off your expenses for the short term, and hopefully you'll be able to sell it for $400,000 in the near future. Now, I don't like to do that. For me, that's speculation because it depends on so many factors that are out of my control. So I don't like that because if home prices go down, well, now you're stuck with a property that's not making you any money, and now you're underwater on this property. So instead, what I look for is this, because even if home prices go down, well, I still got my rent to support me. And I have enough of a cushion that even if rents go down, that I'll be able to help take care of the costs. So that's my opinion, or what I look for when I invest in real estate. But this is, what you have to pay attention to, where instead of trying to time the housing market, you have to understand the factors that you got to pay attention to, what's going on with interest rates, and know your strategy. Just like with the stock market, just like with the crypto market. In real estate, you have to know your strategy. For me, it's cash flow. What is it that you're investing in? And now look for that. If you enjoyed this video and you want to see the thing that 99% of people get wrong about investing, I made a video covering it, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. If you don't want to live like everybody else, then you're going to have to start doing what the majority of people are not doing, and that means first,